I'll start with a quick question. I want you to think about the stock market. I know we've all heard about the stock market. Is pretty much volatile. It's going down, it's going up, and everyone is trying to, those who are interested is trying to buy some stocks, trying to trade it. But in this presentation in particular, I'm gonna go over some AI strategies that basically the high frequency traders are actually using to be more profitable. And that is not a very complicated strategies. It's not very complicated. It's not rocket science. This example in particular is very easy, actually. It's easy, at least it's very easy to understand. So I'll start here with a quick overview and key insights. AI trading emerged when traditional algorithms reached their limits in handling the speed and complexity of modern markets. Whereas earlier systems relied on predefined rules, AI and deep learning now allow trading systems to learn from data, adapt to changing conditions, and optimize execution in ways humans or traditional algorithms simply can't. They can analyze massive, unstructured data sets, everything from historical order books to market sentiments to predict price movements and improve trade efficiency. But it's not without challenges. Incompatible data, model opacity, and potential systematic risks remain serious concerns. One of the most illustrative examples is JP Morgan's LOXM algorithm, launched in Europe in 2017. LOXM is a low latency order execution system designed for smart traders and algorithms. It uses reinforcement learning to adapt strategies in real time and can split large institutional orders into smaller trades to avoid a slippage. The emphasis is on a smarter execution, not just faster execution. And benchmarks have shown it consistently outperforms traditional engines, and this is proven by many research. So LOXM is also one of the few transparent institutional AI deployments showing how research can be applied in practice. So basically, there are tons of AI algorithms, and these high frequency traders are using it. This one in particular came in 2017 by JP Morgan, and it's very transparent. The structure, the steps are available, and everybody can easily make a simple, actually, sample of this strategy. The competitive edge of AI trading comes from data and computer power. LOXM and similar systems are trained on years of historical order book data, requiring high performance computing clusters to process it all in real time. Smaller firms and retail traders typically lack these resources, which creates a significant barrier to entry. Retail bots are limited by smaller datasets and less computing power, whereas systems like LOXM give institutions an unfair but powerful advantage. So I think in our keynote speech also they mentioned, um, as we are giving more data to our algorithms, it'll make it more precise. So as these high frequency institutions have more power to process more data, eventually they can get more performance from their tradings. So a structured workflow make these systems reliable. Um, which is actually including the data preparation and feature engineering, training on historical data sets, backtesting across multiple market regimes, cross-validation, and simulation of live trading are all critical steps. Even after deployment, human oversight remains essential to manage risk, check execution quality, and adjust models for unexpected market events. The benefits of algorithm trading are clear. It cuts transaction costs by 50 to 60%, executes trades in microseconds, and provides liquidity through high frequency trades. But there are also risks. Synchronized algorithms can amplify market disruptions, as we saw during the 2010 flash crash. Today, over 70% of US equity traders are algorithm driven, showing both the prevalence and power of AI in financial markets. So basically, this LOXM from JP Morgan is not essentially faster, it's smarter. It's actually, so I'll go over an example, but um, it's actually breaking down the trade execution over time. Instead of just buying everything at once, it'll spread out the execution. And with this execution, considering some data, some technical data, it'll outperform the performance. Look, so in the next slide, I'll go over what LOXM teaches us. It's actually extensive training data, high performance computing, barrier to entry, actually for smaller traders and retail traders. Um, but for high frequency traders, it is outperformance. So it's a massive, actually, um, it's a massive chance for high frequency traders. So this is a workflow of how LOXN workflow is working. Looking forward, AI is expected to complement human traders rather than replace them. Regulators are pushing for transparency, interpretability, and stress testing under extreme market conditions. Researchers are focusing on model interpretability and ways to democratize AI for smaller firms. Innovations like quantum AI may accelerate execution further, but will also raise new governance challenges. So the takeaway would be AI trading works and delivers real world gains, but success requires a combination of massive data, high performance computing, and a structured oversight. LOXM is a prime example of turning cutting edge research into practical trading advantage while highlighting the careful balance needed between innovation and risk management. This is an example of the workflow of LOXM. So basically it is preparing the data, then trading, backtesting, cross-validation, simulation, and deployment. And this is a conclusion that practically use of AI as a complement, not replacement for human oversight, regulations, researchers, and this is the future outlook. Quantum AI, this is the future with accelerate execution further, but raises new governance. Uh, this is our the references, and thank you very much. I'll open the floor for the questions.
Thank you very much. Any questions? You can unmute and ask the question or put it in the chat.
Dr. Hannah, I think there's a couple questions, but my chat is not opening. If you wanted to take a look.
I'm not seeing the questions in the chat though.
I thought,
I can't see it either from here. I think I gotta stop sharing here.
Okay. I think someone had asked a question about, let's take a look. Okay, here we go. In manufacturing, are we relying on AI sensors so that it can be accurate? I don't know if that would be ours or somebody, our Dr. Hannah, or if that would be the general question inside of the
I think
okay.
it was just asked.
I think that's in the main room. Okay.
Yeah.
All right. That sounds good. That means people had questions before we got here. Anybody have questions? This is the time.
I see somebody said, hello, can't wait to learn about AI and trading.
Yeah, that's the only thing I see as well. Any
I
question?
don't know what that means. If you like, I can search the web.
Oh, that's AI talking to us.
AI's talking.
AI in action.
Let me see. All right. I have a question for the speaker. When you're preparing your work and you're doing your research into this topic, is there anything that surprised you or anything that stood out? Like I didn't. That's pretty cool. When you were preparing for your slides and when you're doing your research, did anything stand out?
So I think your question is about this particular topic. So
Yes.
I think when we're doing research, we usually expect to find out very complicated stuff and be surprised about those topics. But in this particular topic, the math behind how these high frequency traders are doing their job is very easy. They're just having a power of computing. And this with this AI thing, this is where we can actually get that tools very easily. It's becoming more accessible. So I think in future, when we have more tools available, we can use these strategies to use and put it into application when it comes to stock market and trading for retail traders. I think that's what one thing that stood up in my research and my topic.
Thank you.
Okay, I have a question, please. So I want to find out, is it really appropriate, or so should I say, is AI really going to give us an accurate results in day trading or futures trading, like comparing day trading and futures trading? Is AI really kind of accurate? Does it give accurate predictions?
So it does have some risks, as I mentioned in my presentation. Human insight is essential. However, this specific strategy is requiring a massive input as a data to be processed. So I don't think it's gonna be very applicable as a day traders in your question or as future traders. However, it's a very effective tool, and the research around this topic has shown this performance.
Thank you.
I have a follow-up question to Anthony's. So AI is always learning, right? It's learning. The more we put in, the more it learns. So are you saying that currently with AI, it can do a good job at helping day traders make the right decision in investment and then to have a bigger return on investment?
That's what high frequency traders are doing.
Okay.
However, the difference is um, they have more tools. More tools, I mean, high performance computing data centers to measure everything in the market, including the news, including some technical features of the stock. Um, However, this was limited to high frequency institutions because they have money to actually afford those high performance computing data centers. However, with the AI right now, this is coming to retail traders and day traders, so it's becoming more accessible. So in answering your question, I would say definitely yes. In near future, it's gonna be a very handful and very useful tool, so day traders can actually use it and improve their performance when it comes to trading.
Okay. Any other questions?
I have a follow-up if nobody has anything. Okay, so if I was going to invest and I wanted to do, I'm new to trading, I want to invest some money, what would be the best avenue for me to go? What would you say if I came to you and said, I want to start investing, I'm new at this, I want to make sure that I get some assistance through AI because it sounds like it does pretty good on the predictions. What would you tell me to do first?
So I would. So I think this is a question. This question is different from the topic. However, I would say just rely on the chatbots and ask your question about how much you want to invest in the stock market, what are stocks you're really interested in. Are you interested in more volatile sort of stocks or less volatile? I think this is more likely depends on your financial situation.
Okay, thank you. Anybody else have questions?
I just joined, but I just wanted to ask, how many years of data was considered for the analysis?
So LXM could be applied to any timeline. Um, it could be 1 day, 2 day, 3 day, 4 day, a year. Um, so in summary, let's say you want to buy 100 shares of NVIDIA in, let's say, 1 week. So it'll measure based on some technical features and technical details of NVIDIA, for example, and it'll spread out this execution, this buy order execution over 7 days instead of buying everything in one day, let's say on Monday. This is how it works. And this is actually the research shows that it's more profitable.
Yeah, thank you.
I have a very terrible experience when it comes to trading, especially with the chatbots. There was this chatbot I once subscribed to, and I mean, as I was getting the signals, the chatbot was kind of trading these signals. And trust me, before I could realize I had gone liquidated. So personally, I never liked using this chat box. That is why I asked the initial question, how accurate are some of these AI tools in trading?
Yeah, so these chatbots are not reliable because eventually they need this AI right now. It needs the human oversight. So you can just use chatbots as a guideline. You're the one that making the decisions.